And now in this next report, we are going to look at the scope of banking in Nigeria from the perspective of point-of-sale transactions and operators within this field. Adesewa Odusoga went out and is filing in this report.
One of the many point-of-sales agents in this community. She recently started this business with an aim to fill a gap. The nearest bank along this axis is about a 20-minute drive away.
Before I even started, they would just come, do you have cash? Let me transfer to you. And the bank is removing my charges. If you transfer 10,000 naira to me, they will remove 100 naira. And then you are not paying for the charges, so I'm the one losing. So I now use it to, okay, let me just use it to, that is why I started. So that's just it.
This transaction right here is replicated hundreds of times across different point-of-sales units, rendering different financial services and bank transactions such as withdrawals, deposits, transfers, payment of bills, amongst others. Nigeria fell short of expectations after it missed its target of achieving 80% of financial inclusion of its adult population by 2020, meaning they neither have a bank account, access bank loans, or receive money through the banking system. People who fall in this category are predominantly dependent, reside in rural areas, have low education, and low proximity to access point. But in recent times, the financial service sector seems to be overflowing with some exciting innovation where fintech startups and existing banks are gradually bridging this gap, driving the growth of agency banking. The presence of point-of-sales agents in the most remote areas where there are few bank branches far apart would ordinarily tell how attention is shifting to this sector, which seems closer to the people.
The number of people, the number of adults that are using financial service agents increased from 3% in 2018 to 19% in 2020. That shows about 16 percentage point increase. That is really remarkable.
While agent banking may be replacing queues at ATM stands and banking halls, there are some Nigerians who still do not trust the service.
The POS people can even fraud your account. Reason being that some people don't use ATM, but you can transfer to someone. And by the time you transfer to them, your information is already with them. They can do anything they want to do with that.
At village, 10,000 they charge us 100 naira. But at Lagos here, they charge us 300 naira on 10,000 naira, which I cannot pay. I just say that you give me my this thing. I'm not transacting again. That's it.
So which one do you do?
I would rather go my bank to go and queue.
These concerns may be valid for the sake of safety, but it is also believed that the speed of growth in this sector will not be without reasonable controls.
Those concerns they have are being mitigated by firewalls and chains or levels of controls that are built into those service delivery channels, such as to reduce the possibility of hackers getting into the system to do away with people's resources, or criminals having access to people's resources because of these alternative delivery channels.
From the data, we can see that about 44% of those that are financially excluded, this 35.9% that are excluded, are in the rural areas. So there's need for financial service providers and other actors within the sector to drive their efforts towards deploying more agents in the rural areas.
With the value chain for financial inclusion growing rapidly, especially among rural communities and small businesses, it is expected that key measures, including access to credits for private sector, loan deposit of the rural area, and liquidity ratio for commercial banks, will provide the much-needed catalyst for deepening financial inclusion by 2024.